When you are somebody who's outside the industry, outside the market, and you're not already a business owner, and you call a broker cold and say, I want to buy a business, they're not going to take you seriously. They're just not. So it becomes a numbers game. Like, you need to keep making those calls. You need to keep putting yourself in front of people until there are, out of every 10, maybe one person who's like, all right, here's a genuine listing. And even then, they're skeptical of you through the whole process, right? Like, do you have the money? Are you actually going to execute? You've never done this before. And that continues until you cross the finish line. And you have to have the stomach for that and just understand you're going in with that already working against you.
You're listening to Before You Buy or Sell a Business, hosted by Jared Johnson, the top SBA lender in the country. On this show, we break down business acquisitions, talk to industry pros, and provide real-world advice for buyers and sellers.
All right, welcome back to Before You Buy or Sell a Business. We have a really fun deal today, so let's go ahead and introduce yourselves. Maybe tell us where you grew up, and then we'll kind of go from there.
Yeah, sure. Hey, Jared, nice to see you again. Probably the coolest SBA lender, and there's a lot of characters out there. So you probably can tell from my accent, born and raised in London, England. And how I got here, I sort of grew up in an entrepreneurial family, but went the finance route, spent about a decade in that, and sort of had that entrepreneurial itch. And I let Neilab sort of fill in some gaps. But as we sort of, we got into our relationship about a decade ago, we always spoke about doing something, and stars aligned and timing worked out. And here we are now.
Yeah. From my end, I think, I grew up in New York, in Long Island, which I shy away from saying sometimes, but I grew up there, sort of did the law school thing, moved to London where I worked in capital markets for a while, which was, essentially like capital raising for companies and sovereigns at times. After a couple years, we were married at that time. And as he mentioned, we had always thought about doing something entrepreneurial without really having a full idea of what that might look like. And a couple years ago, he approached me and he's just like, look, I had this aha moment. I think I'm going to quit my job. And I just looked at him and said, you are crazy. But honestly, after we looked into it and thought about it, I said, all right, I'm going to join you in this. And so we kind of went 2 feet in, burned all the boats and said, the path is forward or nowhere.
Yeah, that's wild. So you met in London, obviously, then, right? Was that from work? No, you didn't? Okay.
No. We met a decade ago when I graduated from college. I went on a Euro trip with a girlfriend and, we sort of bumped into each other and just history. Yeah. Yeah.
That's pretty cool. Yeah. So I always thought you met like through work or something in London. So interesting. So yeah. So one of those trips you take when you graduate where you got to run around and get it out of your system. And then you ended up, meeting your husband. That's pretty cool. So fun. Okay. So you had great careers, obviously, and decided to say, hey, let's flip that upside down and go buy something completely outside of what you've been doing. What kind of drove you to do that? What made that sound appealing to you?
Well, from my perspective, I think, I really see myself primarily as looking at things from an investment perspective and, thinking about how can we make our money work for us better. And the opportunities to invest in a small business, the returns on that were just not met in any other kind of asset class. And so for me, I think I just woke up and said, well, this will be my asset class. And if it takes all my time and energy, it's worth it because the returns are worth it.
Yeah, that makes sense. So obviously risk versus reward, right?
Sorry, Jared. Yeah, I think I approached it slightly differently. I sort of had that want to be owner operator, and it sort of always had that itch, and it felt like the right time. And I really wanted to sort of go 2 feet in, really try my hardest at doing that. And this was sort of the great opportunity of doing this. And then sort of my background in finance was on the investment side. So it was helped by that. And it sort of, the two things came together and it felt like the right thing to do.
Awesome. Yeah. People seem to find a different path to get there every time. But typically what I see is that you're still kind of either looking to do something yourself, hopefully have some control, And then, of course, be able to make an investment kind of more in yourself rather than, investing in somebody else's dream, right? So it's great that you at least kind of had a background first. You had good education, you had a career, you sort of learned how things work, and then decided to jump into something else. So maybe we can talk a little bit about what you bought, and then we'll kind of work backwards from there, how you found it, all that fun stuff.
Yeah, sounds good. What did we buy? So when we entered the search, we were pretty agnostic as to industry. There were certain things we knew we couldn't do, especially certain medical things, because you did need certain licenses. Sometimes it was required you be a medical professional in some cases, but mostly we were industry agnostic, looking for the best opportunity, something we could wrap our mind around. We landed upon a window restoration company, and it was hyper niche. I'm talking windows manufactured, within 4 or 5 decades from, about 4 or 5 companies. And there are a lot of them, throughout the country, but there are not a lot of people that have this niche and this level of expertise, because there's not a company that focuses on just this. And I think when we were in our search, I had basically read or reviewed some materials that said, when you see something that niche, it is usually a pretty good company, because there's not going to be a lot of people in that market. And that was absolutely true for the company we ultimately landed on. Yeah.
Yeah, I think that probably summed it up quite well. For me, when we were in the search, landing on this company, what really stood out was the breadth of reputation far exceeded the size. We were almost surprised. Today, we are still surprised. From, on a weekly basis, I get a call, hey, my mum has these newspaper clippings from your company from the 80s and has held on to them because she said they're the best around in this space. It really, I'm just astounded all the time for how strong the reputation is of the firm.
Yeah.
That is really cool. You don't get, like you said, when you find something like that, it's either, I better jump on this, or could also make you a little nervous, because if it is such a niche, like, could it ever sort of go away? But I think it's pretty interesting. Adds a little bit of nostalgia. It makes it a little bit more fun when it's something niche. Also makes it very difficult for someone else to come into your space. When you think of kind of the startup world, when it was really popular, 10, 15 years ago, that was what everybody would ask. What's your moat? What keeps other people from coming into your industry? And I think people sort of don't look at that enough when they are searching for a business or building a business. And so it was kind of interesting to see that that's what you found. So, okay. So then how did you find the listing for it?
So I found the listing. I think I had reached out to a broker. The way we did our search is, there's a lot of online listings. We didn't find them super helpful, but what we did do is call the brokers on those listings and establish a relationship and kind of say, hey, what else do you have? And so I had reached out to this one broker on a listing. I think it was like a wedding venue. And, I don't even know how interested I was, but I wanted to see the numbers. And he kind of talked to me for a minute, and after a minute, he said, look, I don't think this is the business for you, but I have something that I think will work really well. And he handed off this company, and he didn't even give me the name at the time. And he just said, look, I can't tell you how much the reputation of this company really is phenomenal. No one else does this. They're the sort of the name in the country for this. And we just kind of took it from there. It really piqued my interest. So.
Cool. So it made sense to reach out to the brokers directly. And that's one of the major questions I get is, how do I find a deal? And there's so much information online, so many people that kind of have different philosophies and ideas. And I really feel like there are many, many ways to find a listing. But at the end of the day, it comes down to how much are you working? How much are you looking for it? You can't just scroll biz by sell all day long. Are you actually making the phone calls, making the connection? So it sounds like that paid off for you.
Yeah, it did. And I think my philosophy, when it does come to reaching out to brokers, is just that, ultimately, when you are somebody who's outside the industry, outside the market, and you're not already a business owner, and you call a broker cold and say, I want to buy a business, they're not going to take you seriously. They're just not. So it becomes a numbers game. Like, you need to keep making those calls. You need to keep putting yourself in front of people until there are, out of every 10, maybe one person who's like, all right, here's a genuine listing. And even then, they're skeptical of you through the whole process, right? Like, do you have the money? Are you actually going to execute? You've never done this before. And that continues until you cross the finish line. And you have to have the stomach for that and just understand you're going in with that already working against you.
And I guess you could say, if you're not willing to do that, you probably aren't made to buy a business.
Yeah, a lot of it comes down to grit.
Yeah, persistence, and trying to figure out different ways to figure something out is always a challenge within a business, I feel like, as well. So it definitely translates over, and I think you were obviously ready to find that right business. So how long did you search before you found this business?
Okay, that's a good question. So we started in May, June, we started educating ourselves. We sort of read the Buy Then Build book and all of that. And we actually took that super studious.
Yeah, that was 2023.
That was 2023. And sit there and write notes. We got close to closing on a different business, which maybe we'll delve into shortly. That was in September of that year. That fell apart. And then we came over to March of the following year, 2024. And we sort of said to ourselves, hey, we have 2 or 3 months, otherwise one of us should go back into employment. Fortunately, we came to the US in May, we met this broker, we met the business, and everything just went smooth from there. So by the time we closed on that transaction, I think it was October. So if we go from beginning to end, 18 months, I'd say.
Yeah, that's probably about average. Sometimes it takes longer than that just to find something. And then we have people that find something right away and it just sort of works out. But we also have people that take 2 to 3 years. It just depends on kind of where you're looking, how, concentrated what you're looking for. Is it something that everybody else is looking for, right? So then you're fighting over it. So again, though, it takes a lot of persistence and patience to find the right one. So you had mentioned there was another transaction that you had found originally. Maybe talk just a little bit about that and maybe why it fell apart.
So this was interesting. On the face of it, looked like a great company, great reputation. It was a fire sprinkler company. So if you think about the commercial units, particularly warehouses that have the fire sprinklers for safety. So they had a larger company that did the installation and a smaller company that did the servicing arm. The company was growing. It was doing well year on year. Ultimately, everything went great. We met the sellers a few times, built up a great relationship. And as we sort of progressed through the LOI stage, things started to feel wrong. A particular sticking point was the working capital that would remain in the company. The company, because of the installation arm, had huge working capital requirements, which we sort of negotiated pre-LOI. We sort of read all the books that that's the right way to do this, get ahead of those things. I suspect somebody had advised the sellers at that point in time that you're leaving. I think at that time was a third of the purchase price, right, as working capital. And I think from then onwards, for the period of 6 months, we sort of felt like we were getting kept warm without ever closing. And I think we talked about February, March of the following year, we sort of decided that it's time to pull the plug.
Yeah, I think it was a lesson on a lot of fronts. But I think one thing that is a bit of a sticking point is when you get into a deal, the seller, you got to kind of get the right vibes from the seller. Those sellers, they weren't necessarily bad people, but they were, I think, uninformed when it came to the financials. I mean, they knew how much money they were making, but they didn't, I think, fully understand what a working capital requirement even was. And when we presented the number to them, they further didn't understand that it wasn't they were paying us that much, but it was an ask for them not to collect on their bills early. And we tried to explain it to them in so many different ways and hired an advisor to do so. But ultimately, there was nobody in their inner circle, nobody that they trusted that was able to educate them on that issue. And it was never going to be our place to educate them on that because we are the opposing party ultimately, right? We're across the aisle. They're not going to trust us.
Yeah, I think one of the challenges that people had that were sort of coming in maybe, I don't know, maybe after 2022. Before that, there was not a lot of deals that included working capital. It was sort of this kind of old school thinking that you buy the business, no debt, no cash, no receivables, nothing. And then as we had people kind of more like your style that are coming from either upper level M&A or, just sort of understood how transactions happen in the upper markets, they would come in and say, well, working capital should be included, right? Same thing with a lot of the other terms, a lot of like, trying to do earnouts, trying to do forgivable seller notes, all of that kind of stuff was sort of a newer topic or a newer idea from that time period. So a lot of the brokers hadn't dealt with it before. So then when they're talking to the seller on the front end and getting them to sign up to list, they're not telling them, by the way, you're going to need to leave inventory. You're going to need to leave receivables. You're going to need to provide working capital to a buyer. They're telling them, we're going to get you a 4X multiple and you're going to just walk away. And by the way, you get to keep all the cash, all the AR, everything else. And then buyers are coming in going, no, that's not how it works. You're setting me up to fail, essentially. We need to do this. And so then the seller's like, that's not how it works. That's not what my broker told me. That's not what my cousin told me that sold his business 5 years ago. And so it becomes a problem. But now we're seeing a lot less resistance to it. But unfortunately, you were kind of at the beginning of that at that point. But at the end of the day, you did the right thing in pulling the plug, because as you kind of figured out, obviously, if you take over that business and you're not well capitalized, you're just setting yourself up to fail, and it's going to be a really tough, deal to get done. So, yeah.
Well, I would touch on, just to like reiterate, I think Neilab already mentioned it, but the biggest lesson for us there was clearly go with your gut and the relationship aspect. I think we could have killed the deal a lot sooner, but I was sort of boiling things back to facts, and factually they were saying we're moving ahead. Factually they were saying the working capital number, works. But if you do the soft skills and the touchy-feely stuff, it wasn't there. And we could have probably saved a lot of time, money, and headache had we have sort of killed it, in December as opposed to March.
Yeah.
But at least you learned from it.
It was a important lesson, because I don't think if we hadn't gone through that, we would not know how to conduct ourselves with the seller and broker this time around. And also, again, just learning that lesson of like, you need to understand who you're dealing with. Like, you need to buy a business from someone who you can be in business with, someone you can trust. If you can't trust the people across the aisle, then you don't know what's going on in that business. When you get there day one and look behind the curtain, anything could be there. So yeah, transact with someone that you would want to do business with ultimately.
Yeah, completely agree. And a lot of times that is what we sort of figure out within the transactions. And there are many times where the sellers are great actors and you don't realize what you're getting yourself into until it's too late. But I do hear that from a lot of people. We kind of notice that as well, patterns, right? If they're cheating on their taxes, if they're doing things, if it's kind of blatant and they're just like, well, yeah, what do you mean? I mean, everybody does it. That's what we always hear, right? And normally what we see is if they're willing to do that, they're willing to do other things. By the time you get in there, there could be many other things that you're going to deal with. So I'm glad you said that, and it definitely makes sense. So back to the one you actually bought. So you saw the listing or got the listing from the broker. When you took a look at the numbers, the figures, did you feel like it was priced accurately? What did you do for due diligence? And then how did you negotiate?
Yeah, so we sort of met, first of all, the soft side of things checked out almost immediately. The guy was super transparent, open, honest. We liked him off the bat. And then from a sort of top level numbers perspective, I think it was priced pretty fairly. Yeah, it definitely was. And then due diligence, we sort of did our own. We didn't outsource it. We sort of agreed that we would have weekly calls with the seller right up until close, which we did. We sort of had a data file which he would upload whatever we asked the previous week, and he was super responsive. He would turn things around within 10, 15 minutes at times. It was really good to transact with him, and lifted the curtain on 99% of everything that we'd want. So yeah, we had a great experience through DD. All the usual stuff, customer concentration, how a project signed, employee history, vehicles and assets that they own. I felt like we were pretty thorough on that end. Having said that, no matter how much due diligence you do, you never really know the business until you actually sit in the driving seat. And I think that can go one of two ways. And I think we were fortunate that it went on a positive slant. Mm-hmm. Again, I mentioned it earlier, the reputation of the company far exceeds what I thought it had when we were purchasing this company.
I think it's also important if we could go back to a minute on the negotiations and the pricing, right? So we offered a purchase price, and I don't know if we were necessarily the highest. I don't know if they had a couple more offers because they waited to get back to us. And the broker kept calling, trying to push us higher. But there was certain things as part of our offer that were kind of like, really, we needed that in there. And what we were really strict on is we wanted a transition period. And we said, look, like, we need the seller. Like, he needs to be there. I had said for 3 months. I want him there 3 months to help us get our mind around the business. And I know they always say, get the seller out as soon as you can. And there's a lot of wisdom to that. In our case, we were able to ultimately do a transition period in a way where it was okay. And I'll go into that in a minute. But we kind of negotiated with them, and they came back to us with, all right, the first month he'll do a couple days a week. And then the second month he'll do like X amount of hours a week. And then, just done from there. If you want, you can keep him on in a consulting capacity, just remotely. And I felt kind of comfortable with that. And I think that was very key, especially in our business, which, as mentioned, was very niche and has a lot of details, historical details that you can't really get otherwise. The owner was kind of a encyclopedia for this particular type of restoration. So having him as to transition the business the first 2 months, it was vital in understanding how the business functions, but then subsequently keeping him on in a consulting capacity just to kind of have our questions here and there was really important in the case of this business. Now, I can't speak to every business, but this particular business, that was important. And I think it was the reason why things did go so smoothly. And just to kind of take a step back and explain, why is it that it was okay for us to keep the seller around in this case, where it's not recommended in many cases? So my perspective on that is the seller needs to get away from the employees immediately. Like, they can't see him, they can't hear from him. There can be no confusion about authority and who is in charge. But in our case, because we are, a project-based business for the most part, not entirely, I should caveat, and our guys are very often in the field, while we're in the office more often than not, the seller was able to transition the business with just us without facing employees or continuing any sort of authority role. So I think it just kind of worked out.
That makes sense. Yeah. And I agree with you. There are times, and it's funny because I'll have people that call me and go, yeah, I pushed so hard to basically lock the seller down for 6 months to stick around. And then a month in, I'm like, how do I get them out of here? And I experienced that myself before. And so, but in your case, it definitely makes sense. And obviously each situation is going to be a little bit unique, but if you can have a good transition period and you're getting along with the seller, then it does make a big difference when you're, trying to do things. And of course, part of the reason also that people want to push them out right away is they want to make some changes, or they want to maybe update a couple things. And most of the time, the seller is going to be very resistant to that. And the last thing you want is you're trying to do it and they're sitting there telling you, no, don't do it that way. This is how I've always done it. And you're like, it doesn't mean it's right. So yeah, I'm sure there was some of that, but it's always good to at least be able to sit and watch, and then also be able to reach out and ask, hey, I can't find this, or how do I handle that? It sounds like it worked out pretty well. So we'll talk about the structure a little bit. So your purchase price was around $2.5 million. You were able to take advantage of kind of a 2-year window that we had within SBA, where you didn't have to put a full 10% down or even 5%. A seller carried about 10% of the total project on standby. So didn't have to collect payments on the note for the first 2 years. And then you were able to put down around 2.5% Obviously now we're not able to do that. Seller needs to be on standby for a full 10 years or life of the loan, and you still would need to put in 5%. So you got to take advantage of that. And then, I'm sure it kind of helped with keeping some of the working capital and being able to, maybe get into a good sized transaction, but then also gave you a period where you're not having to pay that seller note to help grow the business. So I'm glad you're able to kind of work that structure. But looking back, is there anything you would have changed with the structure or maybe even in the negotiation period?
I think I'm pretty happy with the way things fell out. What's interesting is, whilst we did get working capital for the company, and it was required in our instance, and we did months down the line realize that was a great shout.
I have to say, you gave us that advice, and I think about it. Especially in the first 3 months, I thought about you like every other day, and I was like, thank God for Jared's advice.
Well, good.
And the reason why it was more useful advice in this instance than the prior transaction is because this business actually has a negative net working capital requirement because they collect a lot of the project up front and they bill the end of the back end. Having said that, we were new at the beginning, and it was, going over Christmas, it was a slow period and we had a lot of bills to pay. So even though we knew that financially it had a negative working capital requirement, we actually needed working capital and we got it, which was great.
Yeah, especially because when you just do a transaction, there are a lot of upfront costs. In our case, especially like insurances, when you're in a sort of construction adjacent business, I'll call it, are really high in the state of New York. So yeah, we had a lot of sort of costs right at the beginning.
Yeah, there's always things that you're going to have to pay for. And then you also normally will see just typically a little slight drop in revenue. And then while you're making improvements and trying to fix things or clean things up or even learn the business, you may make a couple mistakes. Then it starts to come back up. And so I tell people all the time, like, how much time do you have? I can look at your business. I can tell you like 12 things that you're not thinking of that you're going to have to pay for. And then they're like, oh, okay, let's go ahead and take the working capital. And like, we've been doing this forever. I could tell you all the calls I get afterwards saying, I wish I would have done this. I wish I'd done that. I didn't have enough. And it's like, yeah, so we'd rather you have too much than not enough. Right. So glad that worked. So, okay. So let's walk through, or if there's anything during the transition period of like working on closing the deal, was there anything there that you wanted to talk about or anything you would have done different? Maybe some advice that you would tell somebody that's going through the actual transaction process?
Use Jared. It's stress-free. I think overall, though, just like to be clear, I think our deal team on the second transaction in its entirety was different than the deal team on the first transaction. Yeah. And on every instance of every professional, they were better, and I think that made a big difference. We had
a good deal team wants you to close. Every person on that deal team wants you to close. And if, those advisors aren't pulling in that direction, I mean, certainly not to either party's detriment, but look, like there was times people had to talk me down, right? Like I would be annoyed about this, that, or the other. And they were like, it's not a big deal. Relax. And it kind of kept me in it. And I didn't sort of blow my top at the seller or the broker. And it kept things, nice and allowed things to go smoothly.
Well, the transactions are very emotional for both sides. Seller is pretty much, I like to equate it to they're kind of sending their kid off to college or, marrying off their daughter. And the buyer is having a baby and trying to figure out, how do I do this? This is crazy. I've never done it before. So there's so much emotion, and then no one ever seems to be on exactly the same wavelength. So it is tough. But yeah, having a deal team that has done it a million times and sit there, yeah, this is normal. Sometimes I almost forget like how emotional it is because I'm so used to doing it. But then I also have to remember, like, this isn't my transaction at the end of the day. I'm here to help you and get you across the finish line. So you're a lot more vested, than we even are. Of course, we want you to be successful. We need you to be successful to pay us back. But at the end of the day, like, it is such a big thing for your family and your future and everything. And so it's easy for us to say, hey, chill out, we'll be okay. And then instead of realizing like, oh my gosh, you've been searching for 18 months, you're having, you had to move, you had travel, you have a relationship in the middle of the transaction as well. Like there's so many things that you have to deal with. And so it is good to have the right people that can calm you down and keep you on track, but we also have to try to remember what you're actually dealing with. So, but I'm glad it went smooth. And, so, okay. So maybe we can talk a little bit about what happened day one, what happened once the seller was done with the consulting. Maybe give us a little update on how the business is doing now.
All right, we'll start on day one. Day one, we sort of agreed that the seller would come in and sort of gather everyone round and just announce sort of his departure, at what point we would step in. And we prepared for that speech countless hours. That was one of the memories that sticks out. And then I think the first few weeks, there was a lot to learn. For me personally, I felt like it was information overload. Mm-hmm. And where if you sort of prior to the deal closing, I thought I would take more of a operational role and Neilab would take more of a sales type role. It's project based. We're constantly making sales. It actually happened the other way around. Neilab was quicker at grasping sort of the details and managing the team. It happened to be that I went on sales visits with the seller anyway, so I sort of quickly grasped that side of things, and we continued to play that out.
Well, I'm sure the English accent helps a little bit on the sales side. So
it definitely does. They think I'm an expert in this space, which I'm getting to be there. I would say that, so that side of things, when I think the first few months were more steady than I expected. And that was because we were in the midst of projects. So the guys knew exactly what they were doing. We weren't setting them up for new projects. And, the waters felt calm. I think a few months later, things started to get a bit more choppy, and we started realizing that there were a lot of details to learn.
Yeah, it's kind of like ebbed and flowed from the start. I think a lot of information is thrown at you at the start, and you're just trying to hold it together with like bandages, and you're like, please, God, let this continue and let me not be found out for the imposter I am. And then you think, like I found some footing, and then a bunch of shit hits the fan and you're like, wow, I really missed that, didn't I? And over time, the sort of shit hitting the fan, quote unquote, has, I don't know if it's diminished or we know what the sort of areas of failure could be, and we're protecting better, and also we're better prepared for if it ever happens. But it is very much still a learning process. Look, like we've owned this company maybe 9 months, maybe 10. I feel like I've learned a mountain of knowledge, and if there was another mountain of knowledge to learn, I would not be surprised. So yeah, it's iterative.
And then I think I would add that you become robust as an owner operator. You face problems; they always feel the end of the world. But once you've dealt with them, you know how to deal with them the next time, and you just get better and better as time goes on. In terms of how the business is doing now, so we definitely did have a dip the first couple of months, and I think that's largely because we didn't know how to track operational efficiencies. In a project-based business, if things take longer than expected, you effectively lose money. I think as we came into January, that turned, and I think we're on course for doing the best year, I would say, that they've had in their history.
Great. That's awesome. Yeah. Yeah. I mean, everybody calls it a J curve, right? So they say it comes down at the beginning and then goes back up. Doesn't always happen. Sometimes there's a larger part of the bottom of the J than what you would like. But there's a lot to learn. Obviously, like you said, the mountain of things you have to learn just seems to never completely go away. But that's good. And I mean, obviously there's kind of some fun in that as well. You're definitely not going to be bored. You're not sitting staring at a computer screen all day long every day in London or wherever. So it's fun. You get to get out and do things and talk to real customers and stuff. So that's fun. So, okay. So what's next?
I think there's a lot. So this was, often people say when they're buying a business, look for the fax machine, look for the paper. And there is a fax machine and there is paper. But we've been sort of so engrossed with the learning and making sure we're hitting targets that we've not removed the quote unquote fax machine. And I think there's lots of operational tracking efficiencies to be obtained. I I think we need more people to do that.
I think the thing that we were sort of slapped in the face with once we kind of started to understand the business better is that the demand was actually more than what was being met. And so because we're now trying to manage that growth, it's become difficult to kind of do the operational side, kind of bring things a little bit more forward, make them a little bit more efficient. But ultimately, you're going to need to do both, right? Especially if you're growing. Like, you cannot grow unless you do those things. So we're very much on like facing that issue at the moment.
Yeah, and I think our time is clearly the bottleneck. So we need some. I think we'll need an extra person to sort of take some of the tasks off us, so we can work on that sort of stuff. Mm-hmm. So that's where I see the next 6 to 9 months going. Really looking at how if this company was 1.5 times, 2 times the size it is now, what does that look like in terms of tools and technologies?
Mm-hmm.
Yeah, that makes sense. So you've obviously got to get there, but then also how do you handle it, right? You don't want to get there and then not be able to handle it because then you're going to go back to where you were. So yeah, makes sense. So that's great though. At least there's still more challenges, but they're good challenges. They're not, trying to save the company. You're trying to make sure you can handle growth. So that's great. And I find that very interesting that you said that you're actually weren't meeting demand. And I'm sure that gives you a lot of excitement. A lot of people get into a business and they're nervous. Where's the next customer going to come from? And you're sitting there going, how do I take care of all the customers we have? And so that's great.
I think because this company was run by one person, the minute 2 people stepped into that seat, we started to understand, look, there's actually more coming our way. I think that when you're one person and you're perhaps overloaded with work, you kind of start to push things off. You kind of say, look, wait for next year, call me back, I'll get you that estimate. And maybe you don't because you're at capacity. But yeah, no, that was a good thing that we are in fact looking to hopefully grow this a little more. Yeah.
That's awesome. That's great to hear. Yeah. And I'm glad you're, everything seems to be going pretty well. And, it was a pretty smooth transaction. We didn't have anything crazy to talk about, unfortunately, but I guess fortunately and unfortunately, right? So I always ask 2 questions at the end. So first question is, do you have a mentor or have you ever had a mentor?
I think it's going to be the entrepreneurs in the family, the guys that have run companies that are several times bigger and several times smaller, and getting their ear. I think that's where we usually, when we're in difficult places, we lean on for advice.
Yeah. I don't think I personally have a mentor. I'd love one. I don't know. I'd love one.
Jared, are you free?
There you go. No, I wish.
But I think when you look at a mentor, you look for someone who may have some kind of shared experience to you. And it's sad to say there aren't a ton of women entrepreneurs a lot older than me. There's a lot more now in my generation. There were some in the previous generation. There's just not. I think maybe I'm in the market for a mentor. That's the next thing I'll find.
All right. Well, maybe someone will reach out to you. That would be great. And I agree with you there. We're starting to see more and more and more each year of women coming into it. I want to say this year I've done at least 3 deals that are just to women. And I love doing that because I'm like, okay. And it's sort of odd because you start talking to them and you're kind of like waiting for them to say, well, so-and-so, my husband, my brother, my dad, somebody's coming to help. And then they don't. And I'm like, okay, cool. And then what I found out, a lot of them, I'm like, you're a badass. Like how, it's just so cool. And it's refreshing to talk to them and go, okay, so you did all of these things. And I did one, I'm trying to get her to come on. I'll keep bugging her, but she was essentially running the company and then was able to buy it. But the original owner was also a woman. So it was really cool to see that she basically got to hand the company over to her. But when I would talk to her, I'd say, hey, I need you to do, projections. Okay, no problem. I'll do it in an hour. Like, I know exactly how things are going to go. Like, I'm like, okay, so you understand. And then I start talking about a balance sheet and she understood how to do the balance sheet. I'm like, yes. I was like, this is exactly what I want to hear. And so it's really cool to see. And I'm hoping that we'll continue to see more and more and more of it. There's no reason for it not to continue to grow. And so hopefully, maybe someone will reach out to you and then you can obviously return the favor to all the other women getting in. So
Totally.
Last question. What motivates you? What drives you?
What motivates us? What motivates me? I don't even know.
I feel like we're part of the company, especially personally, love to try and do more. I feel, a lot of people that aren't necessarily able-bodied in mind, and thank God have all of those faculties about me, so why not? And that sort of motivates me to do everything I possibly can. In terms of the business, I feel part of the history of the company, and it's got a reputation I've spoken about numerous times, and doing our best to continue to do that and exceed it where we can.
Yeah. I think that makes sense. I don't know what I'm motivated by. I think it's like building something really motivates me. I also think that often I'm not motivated, but I think that's the work you put in, right? Like you do it unmotivated, you do it tired, you do it when you're not well, you just put one foot in front of the other and keep going.
Yeah. Well, finding the little things each time is what'll keep building a mountain of a business. So I really appreciate you coming on. It was great talking to you. Haven't got to see you for a while. It's probably been over a year, right? Since I think I saw you in New York once. So, happy to help with anything we can in the future. Wish you well. If there's anything we can do, let us know.
Thank you, Jared. Pleasure speaking with you.
Good seeing you.
You as well. Thanks.
Thank you all for listening to Before You Buy or Sell a Business. If you found value in this episode, please follow the show, leave a positive review, and share it with someone. For more information, check out jaredwjohnson.com. We'll see you all next time.